Hey guys, in this video I'll be talking about how to use your equity to build wealth through property. Now, even if you haven't been a property investor and haven't invested in properties in the last year, you could be that you have a principal place of residence where you live. You might be living in Sydney, you might be living in Melbourne, let's just say. You might have bought a property, I don't know, 5 years ago, 3 years ago for, let's say, $500,000, $800,000. Now it's worth $1 million, $1.5 million. How can we use that to actually build wealth? Many people don't realize that you don't actually have to sell a property to extract its possibility. All right. So what you do is you refinance. Many people don't know this term, refinance, or take equity out. So let's say you've got a property worth $1 million. You bought it a few years back for $700,000. There are hundreds of thousands of dollars of what we call equity in that home. What you can do, this is very basic. I want you to look into it if you don't already know. What you can do is you can go to the bank or go through a good mortgage broker and ask that person or ask the institution to value your existing property. They'll value it for you for free, and they'll say, look, I think you have about $300,000 of equity. In other words, the difference between your current valuation and your loan. So if you've bought property a year, 2, 3, 4, 5 years ago, chances are you've got hundreds of thousands of dollars of equity in there. That equity is gold. Don't waste it, right? Don't waste that equity. You don't have to sell your property to extract the possibility from that equity. Let's say you can extract $200,000, right? If you go to the bank and say, I would like to extract this $200,000, they will say, okay, so long as your borrowing capacity is fine. And one fine day, they will deposit $200,000 into your bank account. Now, that's not free money, it's a loan, but you can do whatever you want with that $200,000. You can use it to buy 2 or 3 investment properties under $500,000. You can invest it, right? The beauty about investing it, and look, this is very fundamental, very basic, but important. The beauty about investing it is that you will take, let's say, $70,000 of that $200,000 equity and be able to buy a property worth $350,000, including all transaction costs. All right. Now, that 350K property, as long as you follow data, will rise in value, right? So let's say you have extracted $200,000 of equity. With that $200,000 of equity, you should be able to buy $1 million worth of property. Whether that's 2 properties or whether that's 3 properties that are a bit cheaper, $1 million portfolio you can build using $200,000 of equity. The beauty about that is that $1 million portfolio, let's say in 5 years' time, so long as you follow the data, so long as you know what you're doing, it will grow in value. That growth could be a few $100,000, it could be $600,000, $700,000, it could be $500,000, but let's just say $500,000 in 5 years' time. 50% growth seems pretty reasonable. Let's just go with that. Now, that 50% growth or $500,000 of growth on a base of $200,000 is a multiple of 2.5 times, or in other words, 250% return on investment. Where else can you get a 250% return on investment in 5 years' time? Not many places, right? Maybe Bitcoin or places like that. I don't know anything about that, but that's very high risk. Property, you have something you can touch and feel. You own land, right? So that's the beauty of it. You have become a property investor because you started off with equity. You don't need savings in the bank. Even if you have 0 savings at the bank, that equity is sufficient to get you those 2 or 3 properties. And if you're buying in good locations under $500,000, you should be building some passive income along the way as well, right? And I just think that not many people fully comprehend the possibilities. Those of you who follow me probably be thinking, PK, this is a bit of an elementary video, very basic, very fundamental. It's not really teaching me anything. But this video right here is catering to those who are brand new, who know they have made money by their principal place of residence increasing in value, but don't fully understand the consequences, the positive consequences of that. They can go and refinance their principal place of residence, take money out without needing any extra savings. They can use that to build a portfolio that will give them passive income. In other words, net income after all expenses, to substitute or add to their PAYG income or business income. And they will build wealth. They will gain that capital growth. This is how many property investors start, right? You don't need savings. And I know that basically all homeowners in Australia have equity in their home, because basically everything has gone up in value over the last 12 months, last 18 months. So don't let this opportunity pass you by. Don't think it's high risk. Everything carries risk, right? But in my experience, and in the experience of probably hundreds of thousands of investors in Australia, Australian residential real estate is as blue chip an asset class as you can get globally, right? In the last 40 years, prices have only fallen 3 times, and the maximum they fell was 5.1% in 1 year. All right. They've only fallen 3 times in 3 years in the last 40 years. Now, history is not always a good predictor of the future, but history does tend to rhyme. There tends to be a rhythm about an asset class. So the point of this video is to say, let's just break it down. Your house has gone up in value. Go to the bank, go through a mortgage broker, refinance it. Get that difference between your valuation and loan out. Use it, make your money work hard for you. Especially right now, in a time where there is inflation, money in the bank is going backwards. Do something with it. You have this untapped asset. Equity is endless possibility. Use it. That's my motto for this video. Use it, use it, use it. Because what you'll find is that in 5 years' time, you've built hundreds of thousands of dollars of capital growth. You've built tens of thousands of dollars of passive income. Okay, so it's not hard. The steps to do or to follow: go through a broker, refinance, get the equity out, then create a strategy. Strategy means, what should my budget be? How should I cut up my $200,000? What is the budget? What's the yield that I'm looking for? What should my risk appetite be? Do I want to be an active investor, subdivide, renovate, or that's all too hard for me, I just want to be passive? That's a strategy. Once you have a strategy, then you do location selection, suburb selection. Suburb selection means, of the 15,000 suburbs in Australia, where is the data the best for positive cash flow and capital growth? Then it comes to finding the best pockets within those suburbs, right? Because there's always good streets, bad streets, good properties, bad properties in any suburb. Then you need to value those properties so that you don't overpay. Then you need to negotiate so that you don't pay market value. Ideally, you get something at a bit of a discount. Understand the tax side, because you can actually save tax on this journey. The legal side, which entities to buy this in to protect yourself and save tax. And then finally, build a team around you. It's not hard. Mortgage broker, conveyancer, solicitor if you need that as well, property managers, etc. You just don't need a few good people that will guide you through that. It's not scary. It's not scary at all. If you don't have these people, join my Facebook group. I'll tag some amazing people that will be able to help you in that journey as well. So keep it simple, guys. Property investing doesn't need to be scary. Yes, there's days worth of content on my channel about various dimensions and aspects of property investing. But at the heart of it, you have equity in your home. I know it. Most people do right now. Use it, and that will mean that in 5 years' time, you look back with a smile because you've used that opportunity. That's really all I wanted to say today. I wish you all the very best. My name's VK. Catch you later. Bye.